stunning rally in the second half of the day, and that sort of became clear as soon as in the morning the low of yesterday was defended, and as soon as the market started to make a move towards the high of the day, especially on the bank Nifty, which really has been leading the market from the front. Just look at the last hour move on the bank Nifty, now up about 300 points. The big question is, was this just a two-day pullback, and is this now back to the previous sort of move, or is this just perhaps some bit of move within the move that we've seen over the last 2 days? But whatever it is, it's a big move that we have on both the big indices right now, Nifty and Bank Nifty. Surabhi, hi, good afternoon.
Good afternoon, Anuj. Inverted yield curve. What inverted? There's nothing inverted on that chart. I mean, it's soaring away to the day's high. But really, to take the argument forward, the point that you raised now, whether we see this as a resumption of the uptrend or is this a pause of a downtrend which began. Again, if you look at the texture of the rally, it's very widespread today, right? Mid caps are participating. Big stocks that have taken a breather like Reliance Industries, some of the banks, when they're all firing away. So wouldn't you be inclined to believe the former than the latter in the argument that you just put out, that this is a resumption of the uptrend?
Look, I frankly don't understand what the inverted yield curve is. I mean, I read the screen, Surabhi, and the screen was telling you that the market was due for some correction. That correction happened, but as soon as there was no follow through in the correction, globally as well, and in India, as soon as there was no follow through, there was the resumption of the original move. I think the biggest example of that is Reliance. That's the one stock which was really leading the market rally. Reliance, ICICI Bank, Bank Nifty itself. These are the stocks which are leading the market. Now look at that move now, 2.5% higher. I'll just give you another example. Indigo, and making this point in the morning as well, that perhaps that cute trade played out yesterday. That now Jet's gain will be Indigo's loss and all. But look at that stock move now once again on the higher side. So the short point is that the dip has been bought. Now you would want to see the FI number as well, because the rally has been fueled by that. There was some bit of call buying yesterday from the FIIs. Not as much index futures and not as much cash. My sense is today you would have seen some cash market buying as well, because yesterday there was a bit of a punt which was taken. Today I think you're getting more sense that this is a market which is now resuming its move back towards that 11,600 mark. That unfinished business of going to its previous highs on the Nifty, that's still left. So let's see. But the last hour can be really interesting. My sense is there will be some leftover shorts from the first half today.
Okay, let's see. Right now, it's bulls in absolute control of this market. There's an 80-point rally underway. And look at the contributors. You've got lots of big names piling up on the upside. Let's get started. This is Closing Bell, and here is what is lined up. Green across the screen as the indices surge to the highs of the day. The mid-cap index mildly outperforms the benchmarks. Strength seen in heavyweights like Reliance, ICICI Bank and Kotak Mahindra Bank driving the Nifty higher. IT stocks like Infosys and TCS along with ITC are the key drags on the index today. We will be discussing all of these trends with S.V. Tulsian of svtulsian.com, Dipan Mehta, Director of Elixir Equities, and Sudeep Bandyopadhyay, Group Chairman of IndiTrade Capital. Now, as the bulls look to regain control and as the market looks to get back to its recent highs, how should you look at portfolio positioning? Is this still a good time to go out and buy more, deploy more? What's the call? We ask our alpha manager of the day, Jinesh Gopani, head of equities at Axis AMC. And of course, as always, lots of trading ideas for the last hour coming up with Ashwini Gujaral and Mitesh Thakkar.
Okay, how should you position yourself in this last hour of trade? We have Ashwini and Mitesh now joining us with closing strategies. Good afternoon. Ashwini, is there a trade left for last hour, or is this just about carrying the longs? And what would be your stock-specific calls?
Well, according to my definition of a trend day, these sort of days need to close at the high point of the day. And if you followed that theory, you did okay. My sense is that this is a resumption of the move, and just hardly a 2-day correction, and then you are back off to the races. And since there should be more short positions, I would think we will go and close at the high point of the day. Last hour, sitting on a 300-point rally, you may or may not want to take positions. But one thing is for sure that tomorrow you should get follow through, at least on the bank Nifty. Having said that, Kotak is a buy with a stop of 1310, target of 1345. Yes Bank is a buy with a stop of 245, target of 260. And Havels is a buy with a stop of 740, target of 765.
Okay, so plenty of buy ideas there on ushering at higher levels on the index. Day closes out. Mitesh, good afternoon. Would you be looking at any fresh calls on the index as well? And of course, stock ideas?
Good afternoon, Survi. So I think, yes, we did talk about the fact that I'm expecting 11,350, 11,550 kind of range to play out, and we had bought yesterday. So I think we're holding that, trailing a stop loss to 11,400, just below that, and hope that this bounce back does, play out, at least retest decent highs. Eventually, though, my belief is that we will get past this levels of 11,550 and head toward 11,700, 750, which is the all-time high levels. But it could be a sideways correction, or maybe the pullback is already over. We don't know that. So the idea is to trail your stop losses and try and see if you can book profit closer to about 11,550 on the upside. For the time being, I have 2 buy calls. Grasim is a buy with a stop at 816 for targets of 850, and Hindalco is a buy with a stop at 203 for targets of 214.
Okay. Thanks a lot for those calls. SP Tulsen of sptulsen.com and Deepan Mehta, Director of Elixir Equities, now join us. Good afternoon. Mr. Tulsen, it was somewhere around this time yesterday when we discussed Jet Airways. You stuck your neck out on that. It was 233 then, now 273, 40 rupees higher. What's the advice now? Take money home or carry it?
See, Anuj, if you are a near-term trader and if you have bought it for maybe short-term, maybe about for a week or so, definitely, because yesterday also I have said that we are looking for a target of 275 to 280, which we have seen having achieved. That's for the near-term investor. But now come on the events. 9th April, we will be seeing the bids being invited by the bankers. And it's a foregone conclusion that there will going to be the very, very good interest. And as per the talks, what you have heard from the SBI chairman, that the homework has all been made by the lender in a very nice manner. There are going to be takers. Even the Etihad stake will be bought at the same price. Open offer also will come at the same price. And yesterday also I have said that, given an example that presume the bid to be received at least 300 rupees. So if you have that call and you have the timeline from 9th April to 30th April, you have the safety that yes, these events, these 2 events, 9th April inviting the bid and closing the date is by 30th April, will keep the stocks positive till then. And in fact, now I am what my advice is that if you are holding the stock in cash, and today stock is out of F&O ban, which is giving a very good trading opportunity. So what one can do, that those who have bought the stock in cash earlier can sell it now, either buy the future of at 262, which is ruling 12 rupees lower for this series, or maybe the future of April, which is ruling 24 rupees lower. So play on this differential, because as I said that the next, even if you take the April expiry, 25th April, no negatives are going to be seen, because bids and the finalization of this new suitor will be finalized by 30th April. So you have the margin of safety, or maybe the events will support the price till 25th April, till we see the expiry. So you have lot many ideas available today in the stock as a trader. Either, write 260 put for March, which is giving you 7 rupees premium. Even by paying 30% premium of 80 rupees, one can earn 7 rupees premium in just couple of days. Or maybe write 260 put for April, 240 put for April series at 24 rupees. And again, so there are combination of this. So if you are holding the stock, those who have the ready stock in their hand as an investor can enjoy these trading opportunities. But otherwise, on a simple terminology, if you ask me, if you are satisfied, if you have the patience to look for a higher profit, can remain invested for the next 1 month to see the share moving to the next target of 290 to 295.
Okay, 290 to 95, those are the levels, as Mr. Tulsian is pointing out. It's been a heady ride for those who got in at the right point on Jet Airways. Some very, very smart gains in the last few sessions. By the way, speaking of gains, take a look at one stock, Bajaj Finance, 3%. Perhaps it's a classic example or, classic learning in, the arena of investing. Now, pull up a one-year chart. There was a beautiful opportunity after the gloom and doom of IL&FS and DHFL. September, you're getting the stock at around 2,000, and now it is virtually back at its all-time highs, approaching the 3,000 mark once again. Dipan Mehta is with us. Dipan, the right time obviously to buy would have been in the gloom and doom. But if someone didn't do that and now they're watching a price of near 3,000 back on the screen, what would your advice be? Is it still a buy?
No, I don't think so. And with you disclosure that we and our clients are invested in Bajaj Finance, at these levels, I think heady valuations and you couldn't be in for a slight disappointment or even an extended period of sideways movement. There are far more attractive stocks available in the tier 2, tier 3 type of NBFCs, and investors could look at those stocks, maybe like an L&T Finance or a Cholamandalam. Some of these stocks also have been beaten down, Shriram Transport, M&M Finance, and I think the risk return profile for those companies is better than Bajaj Finance. But no doubt, I think if you're an existing shareholder of Bajaj Finance, it's an easy decision, just remain invested. It's just that adding at these levels may not give the absolute outperformance that one is looking for. But it's a secular performer and really industry beating growth rates, which may continue for a few more quarters. So if you really want to buy Bajaj Finance, then maybe wait for a correction of about 10-12% or so, and then maybe you would have some amount of margin of safety then.
Okay, the market's surging more, by the way, and like we discussed, because there would be some more shorts, there's some incremental short covering, especially in the bank Nifty, now up 350 points on the Nifty Bank, led by HDFC Bank now. In fact, if you see the chart of HDFC Bank, that's making fresh high of the day. Yes Bank has moved to the high point of the day. In fact, it's a fresh breakout that we have in both HDFC Bank and Yes Bank. Apart from that, of course, Reliance continues to look good. Some of the PSU banks are joining in the party. So SBI, Indian Bank, well, it's really across the board. Who knows, 11,450 already on the Nifty. 2 days still to go for expiry. It's looking quite interesting. Mr. Tilson, your thoughts on this big rally in GMR Infra today? Since morning, there's been some, in the morning there was heavy open interest build-up. That's all been squared up, but still the stock holding up about 12.5% gains.
Shalus, that is on the theme of further monetization of the Delhi land. In fact, company has really what you call lost the opportunity of not monetizing the land when they did about 7-8 years back at 100 crore per acre. And now they are looking in the second tranche, but my worry is that will they be able to, though we talk that they have some 130, 140 acres, because mind it that Delhi is a 5,200 acre airport and 5% of that is allowed to, I'm just giving the statistics for clarity of the investor, and 5% of that can be used for the non-aero purposes, maybe like hotels or maybe the parks and all that, the commercial parks and all that. So they have availability of 250 acres. Of that, about 110 acres have already been monetized, so they have about 140 acres. But they have all been dilly-dallying on that. You can't mobilize, you can't monetize the entire 140 acres in one go. The moment you will see 20, 30, 40 acres getting monetized, again there has to be a lull. And mind it that 60 years is a lease period, 30 years plus 30 years extension, of which 12, 13 years have already been elapsed. So yes, the things are looking positive if this land monetization happens, but how far this pace will go on and for what area has to be seen. So taking these into account, I won't be taking a positive call on the stock from here on, because right now they only have the airport as the model, because the power projects are seen under monetization, where there has been a lot of stress seen by the company, and even the road projects have already been exited by the company. So I don't think that alone airport can, and there is no clarity in respect to the 46% revenue sharing by airport authority also, whether that will be paid upfront by the company. So that will again reduce their land monetization impact by 46% if the upfront payment is made to Airport Authority of India.
Well, look at the manner in which the market is surging now. It's 111 on the Nifty. There's a near 400-point rally on the Sensex. And look at the nature of stocks. There's a huge surge underway on, of course, Reliance Industries. TCS, with this huge wave of buying, has just about hit the positive side of the screen once again. TCS was actually sulking. IT didn't have such a great day so far today, but all of that is changing. So, Anuj, I don't know, yesterday we had a bit of a lull number from the FII, standpoint. But today's, move, I don't know if again we'll get a big cash market number again, because it's all boats are being lifted in what looks like is a liquidity tide. Yeah,
it's, what's also interesting is today we've had once again that global move play out, Surabhi. Though India is clearly the best market. I'm leaving Nikkei because that's part of the developed markets. So always look at Asia x Japan, and in that I think we are the best performing market. It looks like you'll have that Normally, you know, you on a day when you see the kind of options activity from FIIs, normally, anecdotally, in a market like this, and if that works, which is that, you know, you bought calls, and if that works, that normally translates into some physical delivery-based buying as well in big names. And look at the profile of stocks that's rallying today.
Yeah.
And it needs serious money to move Reliance,
Absolutely.
ICICI.
3%, yeah.
Exactly. To move Reliance 3%, to move, you know, TCS the way it has moved from the low point, to move HDFC Bank the way it has. This is serious money talking.
Serious money.
So this is again resumption of that move. Let's see. It's a bit of a party which is on. Also, you know, I'll tell you one more thing. What this move has done today. You know, we've been talking about this. You know, the market will now start to factor in a lot of politics as well. So this morning there was this big risk factor about this this Congress scheme, and you know, what's that going to do? You know, if that was going to be really a big game changer, at least from the market's point of view, the basic premise of the market is intact, because today would have been the perfect day for market to react to that, and that the market hasn't done.
Absolutely. What a rally. By the way, we are now just about 100 odd points off from the recent high, which we hit about 3 days ago before this small little correction set in. It's been a heady reversal, to say the least. We'll take a